All right, guys, it's about that time of day again here, folks. It certainly is almost finished with the month of February, but we got some more work to do here this evening. Speaking of February, it's February 28th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders earn consistent, reliable, dependable profits using a simple three-step trading strategy that we teach and trade together every morning in our trade room. And I've had remarkable success helping new traders launch a consistently profitable trading career by using this simple three-step trading strategy. But tonight, my goal is to find the best of the best opportunities setting up for tomorrow, Friday morning, March 1st. And I got my eyes on the oil, the S&P, the Nasdaq, the gold, and the euro. I'm going to jump in first here tonight over on the oil because as you can see on oil right now, we definitely have a bullish bias to this market. We're seeing higher lows, we're seeing higher highs, but we're running right into a major level of resistance, the top of that trading range that we talked about from last night's newsletter. We did our job correctly today, buying the dips here on oil, but now we got this market trying to push up through those highs. I don't want to buy into these levels of resistance over here. So really at this point, my goal is to find either a pullback to buy off of the low, or I've got a couple different scenarios I'm watching for a qualified breakout and ways to profit from that breakout as we go higher. I'm going to break down all the different scenarios I'm going to be looking for on that in just a few minutes. Over on the S&P, try not to let this chart scare you. It looks very ugly right now. I'm going to deconstruct all these lines here in just a few moments here for us. But the most important thing is you can definitely see we have a bull bias, and of course we're going sideways, right? Most important thing you want to see in this chart right now, we got lower highs, we've got higher lows, we've got that trading range right smack in the middle. Anytime I see a range bound market, I'm going to buy low, sell high, avoid that middle. And so I'm trying to find some opportunities here for tomorrow to buy low, to sell high, and I also want to keep my eyes out for a possible breakout because as you may recall from earlier on this week, right, we're actually coming out of a big trading range and there's potential this market could really jump if we get some positive news tomorrow morning. So we'll talk about fading those breakouts and we'll talk about trading those breakouts in just a few moments. Over here on the Nasdaq, now the Nasdaq is very similar to the S&P, but the cousin here, right, the Nasdaq, we obviously here have a couple big components on this chart right now. If you're a stock trader or if you have traded stocks before, right, this is one of the most commonly used stock trading patterns for breakouts, right? And of course, a lot of traders, we assume now will see that big bull triangle or bull wedge, whatever you want to call this ascending triangle. And a lot of traders will try to buy that breakout. It's not a very reliable breakout trade because, right, obviously we've had a lot of resistance overhead here. So I'm going to look for a couple different options here as far as what I want to see up here to buy with that breakout. I've got one particular pattern I'm looking for to qualify that breakout. We'll talk about that in a moment, but I'd be lying to you, right, if I didn't say I really hope we get that nice deep pullback because I got that trading range here. And we'd like to use that trading range, right, bring it down and buy off of that low. So that trading range makes for an excellent spot to buy nice and low. And then we'll see what the plan looks like if we try to break through those highs here over on the Nasdaq. Over on the gold here tonight, got a great chart on gold. Well, if you paid attention last night, we got that, we nailed the reversal on gold, but the memo was out early. It was the end of the month today. So lots of volatility, right, in the gold market. And of course, we got that failure in the reversal going back higher, and then it just dumped right back down again. The gold bears are now in full control here on the yellow metal. And there's a couple different things that I'm looking at on this chart right now, but really the big clue, and if you're a client of mine, you're probably going, yeah, that's a big clue. It's this channel. This channel has one very big clue in it, and it has to do with the way this price action is kind of grinding down the top of that channel. We call these grind breaks or grinders in the trade room, and they really give me a lot of valuable information. I'm going to talk about how I'm going to use that grind break for both selling and buying opportunities right here tomorrow morning. You don't want to miss that right on the gold here, so we'll grab that in a few moments. And then how about that euro? buying low, selling high, buying low. Great session on the euro today. Had that wide trading range. As we mentioned, buy low, sell high, buy low. But see, we're down now at the low of this range. And so I want to be a buyer, right, off of this low of the range, like we always want to do. We want to buy the low of the range and sell the high of the range. This is very much the same as we talked about in last night's newsletter. I've got this trend line coming down, and we're going to try to use that trend line now as a key level of support, right? You can probably kind of read between the lines there right now. But there's one big problem with this, and that is this big move down. Now, I know if you're a client of mine, you know the answer to this question, but guys, what do we always look for when we see a strong move in one direction? The answer to that question, which will then tell me where to look for the best entries, we're going to talk about that answer in just a few moments. And we're going to go over all of these different setups. We'll cover oil, S&P, Nasdaq, gold, and of course the euro here tonight. As you can see, I got a lot to share with you and a lot of great setups we're watching for tomorrow, Friday morning session. Before we jump into those charts though, I want to make sure you never miss a great video here at School of Trade. And to make sure you never miss a video, join our mailing list on the homepage of our blog here at sidewaysmarkets.com. I'll put all the links in the description of this YouTube video. It's very, very easy. Go to the blog at Sideways Markets. All you need is your name, your email address, and then hit that subscribe now button, and make sure when you subscribe to that mailing list, check your inbox, because in that welcome email, I've got a bunch of goodies to give you the best shot, right, at getting the most out of our time together every evening on this nightly newsletter. So make sure you join our mailing list. That way you never miss a beat here on the blog at Sideways Markets. And then also don't forget, tomorrow morning we'll be in our trade room at 8 o'clock Eastern time. Like always, if I can't see you there, if you're not joining us tomorrow, the next best thing is to grab all the charts that I'm going to be using tomorrow morning. There's a big button right below the video tonight to download all those charts and have them ready on your computer for tomorrow. And don't forget, while you're down there, use the comment section to post any questions, comments, feedback, maybe some constructive criticism, how I can improve this video. I love to hear from you guys, and that's what the comment section is for. So any questions, any clarity, any feedback, anything at all, drop in the comment section for me. I always appreciate you leaving those questions below. While you're down there, give me a thumbs up on the video if you like the quality of the content tonight. And as always, if you have any further questions, don't be afraid to pick up the phone and call me. I have a toll-free phone number in the upper right-hand corner. I've also got live support if you're out of the country, or maybe you're like me and you're allergic to cell phones, right? So take care of that toll-free number. Give us a call. Look forward to speaking with you here in the office. All right, last day of the month is only a few hours away. Boy, I'll tell you, the month of February hasn't been easy at times, but boy, has it been a great, great month. The month of January was really, really good for us. Month of February, a little bit more challenging and a lot of stuff coming out here, but really hats off to everybody out there who really worked hard, followed the plan, and made some great profit for the month of February. Tomorrow, that volatility we've been talking about towards the end of the month is going to continue. Remember, the end of the month of February, we're now here into the end of February. Tomorrow we get the brand new month of March. Now, March is a whole new ball of wax. We got the end of the first quarter. We got tax season. We got spring break coming up. And I wish I still took spring break. Maybe go to Panama City or something like that, right? Get some tie-dye t-shirts. But the bottom line, though, is we have a whole new animal to work with in the month of March. And next week, we're going to start putting that plan together. But for now, we've got a Friday session. We want to squeeze as many drops of profit out of this week as we can. And the good news is we got Powell out of the way. We got Cohen out of the way, right? We got the GDP out of the way. We got the Trump, Kim, Vietnam out of the way. Now we are, boy, it kind of feels lonely now, right? We're all sitting here by ourselves, right, talking to our charts. I know I'm not the only person that talks to his charts, right? I'm sure you guys and gals talk to your charts as well. The bottom line is we got one more session left here tomorrow. All we have to worry about, really, there are two big news events on the schedule here for tomorrow. I've got the personal income at 8:30, and I got the ISM manufacturing index at 10 o'clock Eastern time. If I had to guess for tomorrow, I would imagine it's going to be an early in, early out scenario. The first day of the month, when it is a Friday, you'll notice what we're not seeing tomorrow. We're not seeing non-farm Friday, which is usually the first Friday of the month, unless the first day of the month is a Friday. So that's pushed back, right? So non-farms are not tomorrow, and that leaves tomorrow with a little bit like a trader's holiday, almost like a half day, right? Back when we were in school. That's what these sessions usually feel like when that first day of the month is a Friday. So the rule of thumb tomorrow is get in early, get out of there early, and hit the weekend. Hopefully, it's going to be raining tomorrow, I think, probably here all weekend here in Los Angeles. I would say hit the beach, right? Hit the slopes maybe and have some fun this weekend because you definitely earned it with all this craziness that came out this week. So 8:30 news, 10 o'clock news. It's probably going to be an early in, early out session. For me, that means after 10:45, 11 o'clock Eastern time. I really got to have a good reason to be trading tomorrow morning. If I had to guess even more, I would guess the big moves tomorrow are probably going to come after that ISM manufacturing number. Lately, and this will not be forever, but lately it's been that time between 9:45 and 10:30. That's where we keep getting the best setups here right now. Shortly after the opening bell in the U.S., before the morning lunchtime settles in, I'll be there with you guys tomorrow in the trade room. Early in, early out, 8:30 news, 10 o'clock news. All right. Let's put some charts together, though. We are ready to wrap this week up here tomorrow. Had a busy week. Let's wrap this sucker up here on the oil. First of all, let's get some of this stuff off here. You know where the measured moves are. You know where all the levels are. All right, 3 big clues on the oil. One is the bullish momentum. It is quite obvious here right now to see that we've got some bullishness. Right? We're definitely seeing higher highs. We're definitely seeing higher lows. It's bullish, but it's not that bullish. You can see a lot of overlap on these charts, right? Lots of overlap. You know, we're not getting those up, down with no overlap. So it's definitely a bullish bias, but it's almost like a trading range, the way that it's kind of flattening out here, right, as it tails into the end of the morning, right? And that leads me to our second big clue, which is that trading range. And look, we are. We're right on top of that range, right on the top of that trading range that is major resistance. A trading range tells me to buy low and sell high. Combine that with a bull bias, a bull momentum, and I'm going to buy below the low of that trading range. And then, of course, the third big clue is the measured move. That measured move is important because it adds another level of resistance waiting overhead. So the first clue says bull momentum. Bull momentum tells me I want to buy at support, and I'd like to buy when I see sellers getting in trouble. That means I'd like to buy at support down around trend lines, or I'd like to buy where sellers start getting in trouble as they try to sell up around that measured move. Those are 2 areas I'm looking here for tomorrow. The trading range tells me buy low, sell high. It's a bull bias, so buying low sounds great. Right? The problem with selling high, though, is it's a bull bias. So this is definitely where we can look to catch those sellers on the wrong side of the market, right? Catch them trying to sell that high and run to their stops for a nice, easy profit as the market goes higher. And then, of course, that measured move, like I mentioned earlier, that's my level of resistance as well. It adds more resistance there that we can look to catch those sellers on the wrong side with. All right, so now we kind of know the idea here. Bull bias, I want to buy at support. Where can I find support levels? I really like this trend line here. I like this trend line. This trend line is great because it puts me just outside of those range expansions. It puts me just outside of that striking distance of that trading range, which hopefully will give those sellers a chance to kind of wrap that rope around their neck, right? Just long enough to hang themselves with it. So I'd like to see that strong move down. If I can get that strong move lower, that should be enough to kind of fool some of these sellers. And much like we saw back here, where the bears will try to sell off that moving average and run back up, that's exactly the same type of pattern I'm looking for down here. So imagine now we pull back to the low of the range, we pull back to our trend line, the moving average comes down. Now, look for those sellers. Like I said, I want to buy off support, but I really like to buy in areas where I can see the opposite side of the market, in this case, the sellers getting in trouble. In other words, let those sellers try to sell off that moving average. Once they try to sell off that moving average, now I know exactly where their stops are. Once I know where stops are hanging out now, again, it's a bull market. The sellers here are on the wrong side of this momentum. I want to buy right into those stops with a very simple pattern, which we call a two-try failure pattern. I'll talk more about that as we go. Now, as we go higher here, I do not want to chase this market because, well, only rookies chase after markets, right? We don't want to buy high. We want to buy at support. So what I'll do now is I'll wait for a pullback. Now, that pullback is kind of interesting because a lot of times any seller who didn't take their loss as the market went higher, a lot of times those sellers will wait to take their loss on that next pullback. It's a way to preserve capital, right? Much better to take a smaller loss than to take that big loss. So a lot of sellers actually wait for that pullback here now, and then they hit the exit, right? Because that way they're risking less, right? They lose less money. When those sellers hit the exit a second time now, that gives us our follow-up pattern, right? And we take that breakout pullback pattern. Now, there are a couple different variations of this setup. For example, right? Maybe we see market come down 1, 2 legs lower. I'll draw a trend line down, and I can use that trend line for a two-legged pullback going higher. Same basic idea here. Let those sellers try to sell off the moving average, and we're buying off the trend line with what I call a two-legged pullback, and we're buying, of course, right into those stops of those sellers. It's a bull market. Find levels of support. Look for easy ways when sellers get in and try to buy right into the areas where if you were a seller, you'd be forced to get out. Now, that's relatively easy if we get the pullback. Okay, now what if we go higher here? If we go higher here, what I'd like to do is I'd like to take that trading range, I copy and paste it down to create support, I copy and paste it up to create resistance. So what you want to remember is this area up over here at 57.60, give or take some ticks or two, that's a level of resistance that may hold. Bottom line is, I'm expecting to see, as this market goes higher into resistance, I'm expecting to see buyers take their profit. Those buyers will take their profit, and a lot of times sellers will confuse that for bullish weakness, and they'll try to sell off the high. What I look for is, I look for these sellers to try twice. If I can see the sellers trying once to sell at that resistance and sell twice at resistance, now I know most sellers are fully committed, and I know now that even though I'm technically buying high, stops are hanging out now right above that high, and I can look for a nice strong signal to bam right into those stops, and that is almost a guarantee to get a nice one-to-one scalp and then see how far this market really wants to go with that trailing stop, right? Trail that stop from there, right? I call that another example of a two-try failure pattern. So we got a bull bias. I want to buy at support, and I want to find levels of resistance where I can catch those sellers wrapping that rope around their neck, right? I pardon the analogy, but it kind of fits, right, in these scenarios. You want to learn more? Want to learn more of my favorite patterns? Want to learn more about ranges and channels and measured moves and all the stuff we use every day in our trade room? I hope you do, because this stuff changed my life and it will change yours as well. I want to share the love and give you a free trading class so you can learn all the details of my favorite trading strategy right now. I'm going to put a button right up in the upper right-hand corner of this video. Grab that free course. You're going to love every minute of it. I'm also going to put a big red button tonight below the video on the blog. If you're on the blog right now, grab that big red button, get registered for the free course, learn all about our entries, our exits, and everything in between, because unfortunately, I can't go into a very deep dive into that stuff here tonight because I've got more to cover. So let's keep rolling. The S&P looks pretty good. Boy, this S&P's not looking pretty right now. S&P's not looking pretty. Now, let me deconstruct this a little bit here for us. You know where the battle zones are. The no trade zone, right? The no trade zone. We don't want to trade the middle. Stay away from that middle, right? Get rid of that. Now, I've got a measured move up, right? Measured move up. That measured move at 2804. big round number, right? That will be resistance. Let's get that off of there so you know where it is. I like to leave them on here so you guys can see what I did to find them all. And then, of course, I've got the 1 move down, the 2 move down from there, right? I think that's pretty easy to see that level of support. Okay. Measured moves are great levels of support and resistance because, well, they're just outside of that range. So what are we thinking right now here on this S&P? Well, I think it's pretty easy to see. We get a bull move, right, into a trading range. It's also pretty easy to see here as well, right, that we have this prior trading range, right, up overhead. That's a big, big deal because if we can get through this range, we now have the potential for this big monster move higher here. So it's going to be very similar here we talk about on the oil, right? It's going to make sure we understand bull bias right now, right? Bull bias, bull momentum into a trading range. It's a lot like we talk about on oil. I've got my trading range here. What does the range tell me? Buy low, sell high, avoid the middle. Okay, bull bias says buy low. Bull bias says look for areas where you'd expect the sellers to try to sell and look to buy into their failures. Pretty simple, right? Let's break it down one more time here, much as we did on the oil market. As I zoom into this, again, bull bias, stay away from the middle. Stay away from that middle. Don't fiddle with the middle. We want to go down and buy up. We want to go up, let those sellers, and then buy into their stops, right? Let those sellers try to get into trouble up there, right? And buy into their stops. I'll also talk about a pattern to sell off that high as we go through this lesson as well. So relatively easy chart. It's messy, but not when you understand it's a trading range. Most important thing about a range is get out of that range, right? Get out of that range, right? I've got that measured move down around 27.78, and that's going to be an excellent spot for us to look for our entries going back into that trading range. First of all, couple different scenarios you want to look at. One would be we go down to the measured move. Let's go forward here. There we go. We go down to the measured move. We hold the measured move. The sellers try to sell into the measured move. Foolish, 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 right? Selling in a bull market into support. Yeah, they're probably not going to be very happy with the result on that one. We're going to buy right into those stops with the appropriate signal going higher. Now remember, we've got resistance coming down overhead. I don't want to buy high here, so what do? I wait to buy the pullback, right? We wait to buy that pullback from there. It's a 2-try failure into a breakout pullback. That's one scenario I'm watching here for tomorrow. Or maybe we draw a trend line down overhead, right? Maybe this trend line holds. 1, 2, up and over, right? That would also be that same 1, 2 try failure. We use the trend line. We call those 2-legged pullbacks. Again, you can learn all about those patterns up inside that free trading course in the upper right-hand corner. And then wait, one more. What if we go all the way down to retest that low back here, right? What if we go all the way back down to retest that 27.75? Then what's the plan from there? Right? If we run all the way down, then what? Nested 2-try. 1, 2, back in. See, if we really make a run, right? If this thing really runs lower here, just simply looking for a seller failure is not going to be enough because that momentum is going to be way too bearish. So if we do end up running lower, now what I'm watching for is the 1 try for the bears, the 2 try for the bears. Once I see those bears trying twice, that trend line will come up. And looking for that jump right back up, right into that trading range. So again, couple different patterns as we go lower, right? It's the 2-legged pullback. It's the 2-try failure. It's the nested 2-try. They all have a reason, right? They all have a purpose. It all depends on how they pull back, what they look like when they pull back. And remember, right, we'll be watching that tomorrow together, right, in our trade room. So relatively simple strategy there if the market pulls back. Again, I want to stay out of that middle. The middle is not your friend when it comes to a range-bound market. Now, what about the top side? Well, over on the oil, we talked about this breakout pattern, right? We go up, we go 1, we go 2, and we buy into those stops, right? Let those bears try once, let them try twice. I like to look for a trap here, right? My favorite entry on this is that trap, because then that really gets you in nice and low. And as part of that free course I mentioned, I'm going to send you hundreds of examples of patterns just like these that we see every morning, right, in our trade room. So it's a 1-2 trap low and then up from there. But what if I wanted to sell this? What would this look like if I wanted to sell this market? How would I sell this market right now? What if we go up? What's the plan then? Look for the nested 2 try. Same basic idea. If we pummel lower, 1-2 back up. If this thing runs up on some real good strength and we see these buyers trying once, trying twice, and then we see that big fat red candle, yeah, that's your sign to sell this thing back down right into that trading range. Let those buyers try once, let those buyers try twice, and then we'll sell as we go back into that range. It's a very specific type of pattern. It's called a nested 2-try failure pattern. And then one more scenario you do want to keep your eyes open for, which would be a breakout 1, 2, 3 into a spike in channel. These are very common during breakouts. Mark up that channel, mark up the lows, and look to buy the low of that channel. So for example, right, if we go up and I see the 1, the 2, I'm going to buy that, right? We'll buy that trap low. It's a little bit aggressive, right? But because the sellers are trying twice, right, they're fully committed, and all we're going to do is just tap those stop losses, and they'll freak out and get out, right? And that market will run higher for that 1-to-1 target that we talked about earlier. If we get a 1 try and then it jumps up through, we call that a 1, 2, 3 breakout. Easy pattern. Don't chase after it, obviously. Professionals don't chase the market, guys. We wait for the market to come to us. You either trade the market or the market trades you. Ain't that the truth? Look for that pullback around that sweet spot. And then don't forget, right? Don't forget, we've got that big measured move overhead. That's going to be my objective now, right, as we go higher here. So keep an eye on that target up at that 2804 area, which is likely going to be our big target here. The only challenge we see right now is if the market sits inside this range. Just stay patient. Be careful. Don't fiddle with that middle. The middle's not your friend right now. Get out of that trading range. Buy low and sell high. All right. How about some Nasdaq right now? Nasdaq looking like a penny stock right now with this, bullish triangle, if you will, right? I'm going to get rid of these extra notes here. You guys can see that measured move. Measured move's pretty easy to see. I think the most important clue right now, there are, obviously it's a bull bias. The market's definitely bullish. We're not getting higher highs right now, but we're getting some higher lows here. Higher lows are enough. It's one of those scenarios where there's definitely a ceiling on this, and we're going up and we're pushing it higher, right? We're kind of hitting that ceiling. Eventually that ceiling will likely break. The problem is it's very difficult to predict, right, what we're going to get going through that high. And on a liquid market like the Nasdaq futures, it's just not a great breakout pattern. Again, as I mentioned in the introduction, a lot of stock traders would tell you to buy that breakout. Breakouts in the futures markets don't exactly work very well because you can see lots of real strong moves that just completely collapse back down. So bottom line is it is a range-bound market with a little bit of a bull bias to it. So a lot of the same patterns are going to apply. I think the most important clue, which a lot of people might not recognize, is this trading range right in the middle. Yes, I definitely will say there is that bull triangle there, but the lack of that double top right there is really the giveaway, right? That is the range top. There's your range bottom. Now, why is that so important? Well, it's important because whenever I see a range, I know I want to buy low and sell high. So trying to buy up above here, I really got to be careful, right? That's the first thing. The second thing is I know that I want to be getting long below that trading range tomorrow. And of course, we've already talked about a number of those patterns, but let's talk about what the plan is here for us. Again, I want to stay out of the middle. Right? The middle is not your friend here on the Nasdaq tomorrow morning. It will be choppy and sloppy in the middle. I want to see this market break down. If we see it break down, I'm going to draw a trend line across those highs. I'm going to look for that 1, that 2, and then try to use that trend line now, right, as a two-legged pullback. We'll draw that trend line down once we see more information, right, to buy off of that trend line. Another scenario, right, that may come our way here as we pull back. Let's just say, for example, here, right, we do get that run lower, right? Another example would be 1, 2 and over, right? So we're definitely watching, right, that trend line. Obviously, we want to get a pullback. I want to buy off of that low. 1 try, 2 try, right? Failure pattern, pullback pattern, up we go, right, back into that range. These are very, very common patterns that happen over and over and over again. And again, we talk a lot about them inside that free trading class. So again, it's the failure pattern, right? It's the breakout pullback pattern. It's the 1 two-legged pullback pattern. Just make sure you're buying nice and low and buying not at resistance overhead, but at support, right, over or below that trading range. The big challenge here is going to be, right, how do we buy this thing as it breaks higher? We know we have that measured move waiting overhead. Really, at this point, what I'm looking for is that move up. I want to see those sellers try once, see them try twice, and then again, I like to look for that little trap pattern, right? And that trap will be enough to light that fuse to get this market rallying back higher here. Again, let those bears try once, let those bears try twice. The only concern we have in this setup is the fact that we got that measured move right overhead. So just remember, if we happen to do something like this, right, 1 and 2, now I'm no longer interested in buying up there. Now what we'll do is we'll wait for that deep pullback, right? If we end up really jumping here, right, if it really jumps up top here right now, I don't want to buy into that measured move. What I'll look for is that deep pullback, that failure, and we'll just do the sequence right over again, right? So if I see it run up, but we run right into resistance, I don't want to trade into resistance. I don't want to buy into resistance because that's where people like me will be taking profit, right, off buying off that low. So I want to make sure I wait and buy that pullback, and again, try to get it up, fail right off that high, and then we can catch those sellers getting too greedy, right, and buy into their stop loss as they try to fade this thing off of that high, right? I'm trying to buy this because it's a bull market. What else we got here in this chart right now? So we know we're looking for that, right? That 1, that 2, that trap and go. If we get the spike and channel up here, again, you really got to be careful here. Get that deep pullback because you don't want to buy into that measured move. If we stay right inside this range, big time no. Don't want to trade the range. Want a 1, 2, and back up from those lows, right? What else we got here? What else we got? Oh, how about we sell this thing? What would a sell look like on this? How would we sell this thing? There are 2 ways we could sell this. One would be a strong move up. The buyers try to hold once. The buyers try to hold twice, and we sell it back down again. Now, the only challenge on that is going to be this trend line coming up. That's probably not going to be a great place to sell. So if we do want to sell it, I would imagine we'll have to go 1, 2, and then sell, off the underbelly, right, of that trend line. And again, this is kind of a variation of that 2 try pattern, right, for the bulls, right? So let those buyers, not a very good spot to be buying up here, right? Not a great spot to be buying up here. So anybody trying to buy high right now, I feel bad for them. We'll sell right into their stops. I don't feel that bad, though. Everyone's got to learn at some point, right? I learned from losing money. I'm sure most of you probably learn from taking losses as well. We learn more. We do better, right? We see better results. It's the way trading works, right? At least it does in my career. And so we know that if price goes up, we can sell off that high. How do we get short if price goes lower? Let's look left here. See, it's going to be tricky down here, right? You've got this big range here, right? So if we go lower, this is going to be really tricky to be a seller down here. It's not going to be easy. So if we end up going lower here, again, you're kind of like, there's a big range down there too, right? So even if we do see this market tear lower here, it's just really difficult until we see it continue through that area to really want to be a seller down there. So much easier to be a seller off the high with the appropriate failure off the high. Trying to be a seller down bottom here, not going to be easy. I think the only way you could really do it would be if you see a 1, 2, 3 breakout. And then real fast here, you've got to get that new channel and get that sell off that channel high. I mean, you're going to really have to be threading that needle there on that, right, on that Nasdaq, because your objective at that point is back down to retest that 70.48 area, right? So it's not going to be easy. It's not going to be easy, that's for sure, to be a seller in this market right now. Buy low, sell high. We'll sell off that high. We'll buy off that low tomorrow on that Nasdaq. And of course, we'll do it together tomorrow morning at 8 o'clock Eastern time. All right, over here on the gold, the yellow metal. Lots of good stuff here on this gold, right? We talked about the reversal last night on the newsletter. Let's clean this stuff up here right now. Battle zones are in green and red. I've got this very tiny trading range here. That's why the no trade zone's there. You don't want to trade in the middle of that trading range. In my opinion, there are 4 basic aspects on this trade, on this chart. One is the bearish momentum. Okay, bear momentum tells me sell at resistance. The second kind of clue on this is that trading range. What does a range tell me? Buy low, sell high, avoid the middle. What else does a range tell me? A range tells me I can copy and paste the range up to create resistance. I can copy and paste the range down to create support. This is a skinny range, right? Those intermittent fasting ranges that I joked about with you guys, right, last night, right? Those skinny ranges, usually you'll go 2 deviations, 1 and 2, 1 and 2, right? We talk about the euro, which we'll talk about in a second, with those well-fed trading ranges. And so, of course, a skinny range tells me major level of support down there, major level of resistance up there. Those are going to be keys for both sides of this market. We'll talk about that in a moment as well. But I think we saved the best for last, and that is the grinder. Right? The grinder. We've got this channel going lower here. Now, I'll tell you, this channel, that channel looks very innocent. It doesn't look like it's telling us much at all, right? But there's a lot of big clues on that channel. We call these grinders, probably better if I draw it up in a black screen. That way you kind of see the picture I'm trying to make here. What happens is we have this. There's my channel. Okay, channel comes down, we're rotating back and forth inside the channel. Then, at some point, we break free of that channel and we grind down it. Now, the fact that we're grinding down that channel tells me we didn't get the big, deep pullback to allow the sellers to sell high. Right? In a bear market, sellers always want to sell high. And normally when we see a nice, strong bear channel like this, usually the market will pop up and then give me a chance to sell it to go right back down to retest that low. In fact, there's usually, right, like a hidden channel on here, right, that we'll sell into as well. I'm not going to get too much detail there. The bottom line, though, is that with that bear channel coming down, if we don't get that big move up to sell back down, the sellers are never being given a chance to sell high. They aren't, right? There's no way for those sellers to really get that shot to sell high. So what's up happening is those sellers are still waiting. That's not how you spell still, right? They're still waiting up there, right? The sellers who were still waiting, they're still there, right? They haven't been able to participate in this market yet. And what ends up happening is we end up seeing a lot of bears waiting just above the high of that grinder. Now, I know what you're thinking right now. You're thinking, man, Joe, all this effort over just that little bit of information, it's important because what happens is, well, first of all, I don't want to chase the market going lower, right? That's a big, big no-no because now what's likely to happen is eventually the lack of sellers who weren't able to get in overhead, what happens now is they're sitting up there, market almost always comes back up, and we can look for traps, we can look for failures, and we can sell it right back down again. So that grinder is a huge, huge clue because now when I go back and look at my chart now, there's my channel. All that move down, those sellers are waiting to sell high and go right back down to that low. The bears have it. They don't want to sell low. They want to sell high, and they really haven't had any shot to do it yet. So we know there are sellers who are probably waiting right above these highs up here to get short back down. So we should see the market pop back up and then give us a shot to sell this thing going right back down to retest that low. Now that leads me to another important clue. That's not it. Snow out. That blinding white is not the clue I was talking about. I apologize about that. But another clue here is when you combine that grind break along with this range. We have the range that gives us a major level of support down at that 1311. So for example, now we talk about both buying and selling opportunities here. Could I now use that major level of support to be a buyer going back up just to get that grinder and then sell it back down? Well, I hope so. That's my plan for tomorrow. I've got that grinder up here, and I'm expecting now that grind break is going to eventually come popping back higher here. I'd like to find a way that I could buy going back up to grab it. And then at the same time, once we're up there, right, what's the plan to sell it right back down again? Let's put that together right now. So as we go lower here, right, as we go lower, how can I look for a long entry? We talked about this a long time ago at the beginning of the video with the oil market called the nested two try. The market is bearish, right? We're bearish. So what I need to find is I need to look for a clue that would tell me the sellers are giving up on this, or they've reached their point where they're done selling and they're going to take some profit. The first step in calling a bottom, and I really don't want to call it a bottom, but that's kind of the only way to call it, right? The first step in calling a bottom is to finding a level of support that you know you can rely on. So you got to have some potential turning point. And to do that, I've got my trading range, 1 deviation, 2 deviation down. So 1311, right, is what I see as being that turning point. So first we have to get to that turning point. Then in a bear market, how many times are these sellers going to try to send this market lower again? Once, probably twice. So we let those sellers try once to sell. If they're unsuccessful going lower, they'll sell it again at a higher price, right? Remember, sellers want to sell high, buyers want to buy low. And once we see those sellers trying a second time now, I've got a rising support trend line coming over. I've got the 1, I've got the 2, and now I'm looking for that run back up to the high of the range, and most likely at that point now, right, up to that range expansion level over at that 1321 and change up there. So that's the pattern we're looking for here tomorrow, right, for the buy side. It's that nested two try. And again, I would recommend being patient on that to let it really dig lower here, get itself in trouble, and then run back up from there. Now, what if we go, right? What if we get that now? 1, we go down, right? 1, 2, and we find our way back up. It really has a lot to do with how the market runs higher. For example, if it just torches this thing running higher, right? Short covering rally, shallow pullbacks, blistering velocity to it, right? It runs up. These are sellers getting creamed, right? The buyers are making a killing and the market runs higher here. Way too much momentum now to the bulls just to sell into it. What I'd rather do is wait for the 1, wait for the 2, and sell it back down from there. It's almost it is an identical pattern, just the opposite direction, right? 1 and 2. And again, these are both using momentum as the reason for the variation, right, of that entry pattern, right? At first, it's the bear momentum that tells us, careful, careful, let those sellers try a few times. Then it's the bull momentum because of that slingshot back up, short covering rally. We use that bull momentum, right? Almost like this one back here, right? Up and then 1, 2, and then whoop, right back down, right, to retest that low. Okay, so that's the idea behind, right, that pattern. Now, what if I'm wrong? Hey, I'm wrong a lot. In fact, I'm wrong probably more than I'm right, right? That's the beautiful part about trading. That's the beautiful about life, right? You don't have to be right all the time. The good part about trading is if you're only good at a couple things, but you're really good at them, You can make all the money in the world. You can make more money you can spend, right? That's the beauty about trading. You don't have to know everything. You just got to know enough and do it consistently well. A jack of all trades is a master of none, and usually a very bad trader as well. Now, what if I'm wrong, right? What if this market doesn't jump or doesn't push lower, right? Could you start buying right now? You could, right? 1, 2, just make sure though that you really get as low as you can. So make sure you don't chase it, right? I wouldn't look for the buy up here, in other words. Right? I'm not buying up there. That's way too aggressive. I want to get it down so I got more room to go back up. There's more meat on the bone if I do it that way. So if we do want to be a buyer, make sure it's as low as possible here if we don't get that move lower. Another option would be two-legged pullback, right? One leg, two leg, up and over and down, right? Maybe it goes straight up. Two-try failure pattern, into breakout pullback pattern. Same patterns we talked about earlier to the upside on the previous markets. I cover all these patterns in that free trading class, right? It's a 1, it's a 2 try failure pattern, pullback pattern, right back down to retest that low again. But wait a second, Joe. What if it blows right through the top of this new channel I've got drawn in, right? What would a reversal look like? Reversal, 2 things to watch for. 1 would be a strong move up. Strong move up, 1 try for the bears, 2 try for the bears, buying into their stops. That's the aggressive one. Got to be an aggressive move higher, right? Bears try once, bears try twice. Gotcha, right? Trap, strong candle, bingo. Target is back up to retest those highs. What if we get a spike in channel? 1, 2, 3 breakout. 1, 2, 3 breakout. What do? We don't chase after at this point. We don't want to buy up here way too high. Mark up that low, mark up that low. There's a sweet spot. And we're buying 2 try failures, right? Same basic idea, right? Pulling back, moving average comes over, 2 try failure into pullback. Same basic idea, same basic patterns we've talked about so far. So beautiful, beautiful chart here on the gold. We got a grinder on our hands right now. I'm expecting this market to give us a pop back higher. Will that pop give us that chance to sell back down again? Or will that pop reverse and go back up to retest those highs? Only time will tell, but I can guarantee you one thing, I'll be watching closely with all of our clients. Let's wrap up tonight here on that euro. Now, of course, the euro in last night's newsletter, we talked about this euro, big wide trading range, right? These wide ranges can be a little bit tricky because momentum builds, right? That momentum as it comes down is very, very bearish right now. That's the biggest single difference between those skinny ranges and those wide ranges is momentum. Momentum that builds as the market turns right back and forth, which is why the first clue on the euro tonight is this bear momentum. There's a very strong bearish momentum as we go lower. I'm also drawing in a trend line coming down. That trend line will soon become hopefully my best friend to buy off of right tomorrow morning. And then I think the big clue right now on this euro is what we call the 2 try rule. And I'll tell you, you've heard me use this term so many ways on this video because there are so many different ways we use it. The average human being tries things twice, and it shows in the market, right? For example, right, we go down, the bears try once, they try twice, they give up, and they fail. We make that strong move up. The buyers try to hold once, the buyers try to hold twice, they fail. Right? We go up. The buyers try once. The buyers try twice. They fail. The 2 try rule is everywhere. But this one thing, though, the 2 try rule, the kind of the basic fundamentals of the 2 try rule, which we talk about in great detail in our intermediate classes, is anytime we see a strong move in one direction, we expect to see a retest of that low. Right? So that means if I see a very strong bull run, pull back, retest the high. Right? A very strong bear run, pull back, retest the low, right? 1, 2. So why is that important? Well, because as we talked about in last night's newsletter, and again today on this newsletter, there's my battle zones, of course, right? This trading range tells me buy low, sell high, right? Buy low, sell high. Sell high, buy low. Very simple. Stay away from the middle. Okay, so middle's pretty easy. The middle's not your friend. Buy those lows, sell those highs. Now we're down around that low. So we're ready to buy right now, right? Nah, not yet. We have a little bit more waiting to do because we have that strong move down. The strong moves are always a big clue. In fact, in my trade room, I'm always repeating it over and over again. Strong moves, look for the retest. When you see that strong move down, we're likely now going to see that next leg lower before we can get this plan put back together to build going back up into that trading range, which is why I'm not really looking for the option right now to buy now, right? I'm looking for the market now to finish off that double bottom, finish off that retest, then I can use that trend line, right? And we get serious about going back up, right, overhead. So that's a big, big deal right now. I want to be a buyer, but I'm waiting now for that finishing touch, get through it, and then from there, that momentum is going to be really, really strong at that point, right? So if we get that next leg lower, that momentum will be very strong. At that point, we'll go 1, we'll go 2. We'll look for that nested 2 try. Again, because that momentum will be so strong, 1 and 2, looking to buy off of that trend line. Okay. Another way to look at this would be if we do get that second try lower, then it's 1, 2 up and over, right? Or, right, we go up. If I get this kind of forward out here a little bit, right? Let's say, for example, we really collapse lower here. Right? We really collapse lower here. We look for the nested, the 1, the 2. You've got your 2 try failure. You've got your two-legged pullback. You've got your failure, and you've got your breakout pullback. All of these patterns now can be stacked right on top of each other because the beautiful part about these big ranges is there's so much open space. It's like a Cadillac, right? You kick your feet back. There's tons of open space in these big ranges. So we got this. Right, we got this, again, using the trend line after we get that second try, and then it's that two-legged pullback into that failure pattern, into that pullback as we go higher. One of those patterns is going to give us a great shot to earn a couple bucks going back up into that trading range. As we go back into that range, then what? Same basic idea here. Remember, because the range is so wide, that momentum really whips for the bulls now. 1, 2, go, right? Back down in. Or as we go higher here, 1, 2, let her rip, right? 1, 2, let her rip, right? 1, 2, trap low, and up we go from there, right? Again, aggressive, so you wait for those sellers to try once, wait for them to try twice, and then bingo, up into that, right? Up into that range breakout area. And then from there, boy, there's not much else up here until we go up to that 15,000, right? We talked about this last night. There's a lot of open space up here back to that 15,000. So if we can disconnect from this 14,000 tomorrow or next Monday, this could definitely be a very interesting beginning of the month of March for all you Euro traders out there. All right, guys, excellent session here tonight on this video. Don't forget, a lot of ranges, buy low, sell high. Keep your eyes on that grinder over on gold, and keep your eyes on tomorrow morning, early in, early out for a Friday. It's the beginning of a new month. We expect that volatility to keep on cranking for a little bit longer. And as always, tomorrow morning, we'll be elbow to elbow with all of our clients in our trade room. And I hope I get a chance to see you there with me. As always, my name is Joseph. If we don't see you guys tomorrow in the trade room, same time, same place, next Monday. We don't do these on Friday afternoons. And as always, guys, be well out there, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.